Hi, good evening, everyone, and welcome to the Let's Talk About Market episode number 91. If we see today, there was the move was very volatile. I mean, the Nifty index was down over 100 points at one point of time, but then it managed to recover and we saw positive gains of somewhere around 70, 80 points or so by the day end. So what lies next for the Nifty index? That's what we'll talk about. And is there any change of trend or so? Okay. So let me quickly share my screen. Just 1 minute. Before that, I'll pause all the notification. Yeah. So let me share my screen. Please let me know once you all are able to see my screen and once you are able to hear me properly. Okay, is my screen visible to everyone and can you all hear me properly? Okay, thanks Sid, for the confirmation. But there is some question already by someone. What could be the potential wave count? So Nilesh, we are not getting into wave counts. Okay. Let me make that very clear because that is something that we discuss in India charts, not over here. Anyways, coming back to the Nifty index, see, one of the important development that happened earlier was the break of this trend line. And when this trend line broke, a lot of things happened on that day, which was breaking of the averages and RMI getting into buy. And after that, we have seen a correction. Okay, just to give you a context, when we reached around this point on 21st, there were a lot of short-term sentiment indicators that were indicating that a bounce is possible, and now in the past 3 days we have seen some good pullback. Now with this, many of the indicators which were in that oversold zone, they seems to be coming out, especially the ones which are very sensitive. And I mean, within few days of movement that can lead to the moves. So say for example, daily swing, that bounced back already. I mean, in this 2 3 days kind of pullback only, it managed to go back to the 80 85 zone, which is generally termed as overbought, and which means that in the near term there can be some pause that is possible. Average swing, if you see, it has now moved around to 53. So you might wonder that Nifty did not do much today, but yet why is it moving up? So again, this is basically average swing. It moves up and down with a slight lag because we are kind of how do I say? Yeah, we are kind of smoothening it, so that is why. Then the other thing was the derivative data, and now you can see that there is more. I mean, the call shorting is reducing, and currently it is at 76,000 or so. So we need to see post today's data whether we fall into red or no. But typically, falling into red means that there can be some consolidation or correction in the near term. So need to see how that plays out. But if you see, OIPCR, that seems to be recovering a bit. And like I mentioned, see, when the market is in a mood to fall more, like you see over here, okay, market were falling and the OIPCR was around the lower end of the range, and only after that it saw an up move. So it can very well happen that if the Nifty index has to fall further, then you will end up seeing some divergence. But this is something that I am not expecting, at least immediately. The reason being that if you see the Nifty index, and especially the hourly chart, okay, we had spoken about this yesterday, that 25,400 is an important level. The reason being, one is that it is at the upper end of the channel, and the other thing is that see, basically we wanted two things to happen. One was closing above the 40R and then a closing above the channel. Okay, both of them have happened. So now ideally I would imagine that at least in the near term the Nifty is attempting to recover. In case of recovery, what I would be looking out for would be a retracement. So 38.2, it has nearly retraced that. 50 and 61.8% retracement is what it can do. So it is not just retracement, but you also need to keep an eye on the averages. Okay. So both the averages are, right now somewhere around this zone, which is 25,700 or so. So broadly, what I would term is that on the upside, 25,650, which is the 50% retracement zone, and 60%, 61.8% retracement zone, which is at 25,820. Broadly, this is the resistance level that the Nifty index has. Okay. If any pullback has to falter, it has to falter within this zone for it to, again go down. So if this zone is not broken on the upside, I would imagine that this is just a pullback, which we are seeing, and then we might again end up seeing a correction. But if the 61.8% retracement level is broken decisively on the upside, then it would mean that this correction was, some important low was made over here, and then the trajectory would be on the upside, and the expectation will be that it might rise higher. Whether it does not, we don't know. Need to see. Even right now, I'm just taking one step at a time, because I'm just seeing how the index is moving over here, because this path will, kind of help us to understand what happens next. Do we fall further or do we rise higher? Okay. Because over here, what is happening is that all the data had gone to extreme bearish levels over here. Normally, when we see this, okay, happening, and if we are in a bull market, then this eventually resolves on the upside. Okay. But now the problem has been that since quite some time, the FIs have turned bearish. Okay. And they have been continuously shorting, and their short positions have been sustaining for quite some time. So, just to give you a context, in yesterday's expiry, there was some bit of short covering that was seen. They did not roll over as much short as they were earlier. So that to some extent is a positive sign, but we need to see that follow through of, FIs covering, because if that happens, then that also should lead to the market rising higher. Because typically in the past also, if you see the data, the short covering has led to the up move in the Nifty index, right? You see the short covering happening, and you see Nifty rising higher. You see this happening, right? So that is why we need to see, whether we see further follow up selling by the FIs or no. And in fact, uh, by the way, this FIs covering was mainly due to prop unwinding, because we have seen a sharp fall over there. But DIs still seems to be buying and accumulating, and normally DIs are more bullish around the bottoms. You can see over here, they're more bullish around the bottom, and that's where, maybe, you can think that the bottom is still not made, because for a top to happen, okay, which means that there can be, for you to conclude that there is excessive bullishness, for that, the net plus fi, the di's position should be towards the lower end, which means that they should be net short. Okay. So uh, so that's why, that's why I have been highlighting that from a medium to long term perspective, I think this is a good sign, because it tells you that, in general, FIs are very bearish, and DIs are optimistic. And when such patterns happen, usually you will end up seeing that, this thing going down, and markets rising higher. But the question that, that is still not answered by the markets is that, does it want to fall more and then rise higher, or is this a major bottom? I am not sure. Okay. And that's why I am again and again saying that this zone is very important, 25,600 to 25,800 zone. I think once 25,800 zone is broken, then there is this possibility that the index can rise higher towards 26,300. And, And mind you, if we see the weekly chart, right? So this is the weekly chart, and you see that there are multiple tops formed around this 26,300. I think if the Nifty index has to again retest this time, finally we I would expect that it should rise higher, and it might also sort of start looking like a cup and handle pattern, that was forming. I don't know. I mean, it could be because I'm sounding. I mean, I have I mean, let me put it this way, that I'm not very bearish at this point of time. But of course, I mean, if 25,500 to 25 800 will be, I mean, if this zone is not broken on the upside, then I'll be scared of a correction up till 24,500. Okay. And like I told you, I mean, see, if it is going to fall to 22,000 all the way, which is a possibility which I mentioned, but you can't know that in advance over here. You will have to follow each moves what happens and then try to conclude. Okay. So because we talk about short term in this let's talk about market episode, so I don't want to really get there till the time we don't get those evidence. But as I told you, I mean, even if it has to turn, we will get enough evidence of it, market turning, and we'll try to discuss that, as we do this live session. Okay. So that's how I'm thinking about it. Now I would want to see all these short-term indicators going towards the extreme zone on the upside, which means a swing, average swing being over here, average swing also coming over here, and you see, so extreme short-term setups have made that this template where call minus put goes to red, and these two comes to the overbought zone. Then you can say that a top is in place, and then we may either correct a bit and then rise higher, or we actually make a top over here and then decline. So what does it do? Need to see, but that is how I'm thinking about it right now. And then we all have all those other sentiment indicators. In fact, not sentiment, but the diffusion indicator of RMI. That again is pretty fast in that sense. So if this ratio again goes to 80-90, then I'll be careful in the short term. So that's what I'm watching out for in the near term. And options will also help me to say what's going to be the range, because we are having budget right now, and I'm not sure what people are expecting, but it seems like 25,000 and 26,000 are important levels, where 25,500 will be the immediate hurdle for the Nifty index. Okay, so 25,500 Nifty has to break and sustain above that in futures. I mean, right now, if you see, the future price is 25,500. But of course, I mean, we know that the weekly expiry also comes into play, and that's why spot prices, I mean, near about spot prices, what people consider, for taking, for betting on the positions. But yeah, I mean, broadly, so this is the zone, and I think this also kind of coincides with what we have been talking about, which is, even on the technical charts, in the next 2 or 3 days, where the Nifty inches higher closely, these averages will also keep going down. Okay. So we'll see whether we end up getting those corrections or no. And in fact, the OIPCR, which had gone to oversold zones like zero point 0.6, 0.65 or so, that also has seen some recovery. And you can see over here, there was this positive divergence which was there, which now is correcting. And if this kind of comes to around, say, 1.2, 1.3, somewhere around this zone. So this is, I'm talking of the raw OIPCR, because this is where you end up seeing short term tops. So you see this, and you end up seeing some short term tops over here. So if it moves to 1.3 or so, then you need to be a little careful. Okay. So that's what I'm watching out for in the near term. And if you see in terms of sectors, I mean, the ones which are outperformers are absolutely blasting. So if you see metals, it is again rising higher. Oil and gas, so this is mainly because of ONGC. But if you see PSU index also, it has risen higher by 0.6% and was largely an outperformer. Auto not doing good, and this is what I had mentioned to y'all, to watch very carefully what happens over here. But not a good sign in auto, because it is kind of underperforming. Today PSU banks gave up. This was one of the outperforming sector, but I don't know, maybe it could be because of the results it has given up. You need to keep this in mind, that there has been a lot of divergence that have been forming on the RMI as well. So you can see over here, basically this is where the divergence is right now, right? uh, so if the 20-day breaks on the PSU bank, then it may not be good. And also, if you see on the weekly chart, there is a bigger divergence again, which is formed over here, right? This higher high, but this is not making higher high. So of course, one may argue that this is still rising, so why to worry? But when the momentum starts falling again, you actually need to be careful. Okay. So that's how I'm looking into the PSU bank, where today's down move, and those were mostly result reactions. So you need to be a little careful. But PSU index as a whole still looks okay. Metals anyways is very strong. Oil and gas is good. So yeah, and the other ones, the ones which are weak, and I mean, reality again, it is seeing a bounce back, but it is in general weak. Pharma, we had spoken about this earlier as well, that there was this false breakout that it gave, and then it is correcting. Again, not a good sign. Power 2 days in a row, it seems to be doing good. Now we need to see whether the turnaround has happened or not. And for that, I would need that confirmation of prices closing above the averages. That's where we'll get a little more confident. But till then, it will be a problem. And apart from that, FMCG is the one that seems to be falling down, and this has been an absolute disappointment. To be very honest, I mean, I was very hopeful that it might turn around, because I thought that the 50-month average will be held. I mean, the 40-month average will be held. But now that this is giving up, I'll be very scared of FMCG as well, of possibly correcting sharply. I mean, this is the quarterly chart. I am worried. I mean, suddenly I'm worried of this falling to this and RMI completing the cycle. I mean, if that happens, it might be end up being a long term opportunity, but this would mean that still for the next few months, it can be in trouble. So we need to see this month's closing. I mean, we have just 2 days or so. In fact, so as I told you, I'm not so okay. So monthly closing will be tomorrow only, and if that happens below the 40-month, not a good sign. I think if this is not doing well, then I'm sure there will be many that would be breaking down. I mean, of course, ITC is the one which has already broken down, and there we have already seen that selling happening. But I'm wondering what else is not doing that great. So now that I've seen FMCG going down, I'm just a bit curious as to what is happening over there. Oh, so it is Tata Consumer, which might have dragged. Again, there are some other stocks like VBL also. Those were at the long term averages, and now I mean, if that breakdown happens, I'll be very worried whether this will break on the downside or no. And if that does, then again, it will be. I mean, it will not be good. I mean, things can then get ugly. So something that we need to keep in mind. Okay. Uh, and the other thing that I was discussing. So yeah, broadly these are the ones. I think infra, again, it looks weak, but I don't know. Since past 2 to 3 days, it has made a good comeback. If it has to fall further, then ideally the averages will not be broken on the upside. So we need to see what happens over there, and then sort of take a judgment. But I think the better bets, frankly, at this point of time are PSUs and metals, because they are not showing any signs of weakness or so. PSU bank looks a little stretched because they were strongly outperforming. So now, even now, the outperformance is still there, but uh, there seems to be some tiredness that is visible. So let me just also see the RRG of PSU. So you can see over here today there has been some downtick over here. In general, it's in leading, but can this be the early signs? I'm not sure. Need to see it very carefully. Okay. But if you see over here, PSC and metals that I spoke about, those are clearly rising higher, and so far there are no signs of a turnaround yet. So that's a good sign. Okay. So I think that's it from my side. I'll try to take up the questions. Nilesh says, okay, so view on PSU index, if you can give some stocks. So yes, Nilesh, I think I discussed PSU Bank very much in detail. Uh, Again, over here, just to summarize, in PSU Bank, there is not a trend reversal yet, but it is showing some sort of tiredness currently. Okay, so we need to be a little mindful of that. Sid says, why 61.8% is important and not 50% for the pullback. So as you might be aware, 61.8% is a golden ratio, which means it is said that everything in the nature also has that measurement of 61.8. So a simple example of this is that this is my hand, right? Wait, this is my hand. So this part, okay, of this entire hand, okay, this part till here is basically 61.8, and this is 38.2. So in general, the nature follows that Fibonacci ratio, and that is why it is more very important. You can you can go through the concept of Fibonacci ratio and why it is called as golden ratio. I mean, you will be amazed to see all those facts. But in general, it is said that 61.8 is a very important level in terms of Fibonacci retracement. Okay, I hope that answers your question. The next question is from consumption poor. Yes, I would agree that. Deepak says many capital goods, are showing strength. Can we look at them? So see, I have a mixed view over here, Deepak. To be very honest, so I'll tell you why. BSC has a index of capital goods. Okay, wait, I have it in this CG. Yeah. So in so okay. I mean, so to this bias, basically there is a bit of an Elliott wave as well, which means that is this kind of a fine, I mean, up move that we are seeing? I don't know. So one of the issue is that over here the 20 month has broken on the downside. Decide, I mean, last month it has broken and now it is going down. So there is now a real risk that it can fall to this point, and that's where I'm not very comfortable. In fact, ABB frankly has come up recently in last 2 days, but I was getting a bit nervous over there as well because it was indicating that it will fall below the 40 month. But now surprisingly it is holding out well. Cummins India, if you see, there are very big divergences that are being formed. You see this is the divergence that is there. There is a monthly negative close that we have. All the IC members, they know what is the importance of monthly negative close, right? And we are seeing this happening. So there are very mixed signals that I'm getting. In fact, if you see LNT again, which is into cap goods, it might end up posting a negative monthly close. And like I told you, all the members of IC would know what a negative monthly close would mean, right? So cap goods is very mixed. ABB, something like this, which is now seems to be turning around, might look interesting from a long term perspective. But if you ask me, something like Cummins India doesn't look good. I mean, in fact, there is a divergence over here. Then I think Thermax has also, underperformed a lot, and now it has broken below the 40 month as well. So this again, despite meaningful correction, it is looking very weak. So if you see capital goods space in general, it does not look that great. But within capital goods, you have some defense name; those are firing. Okay, and those also fall into PSU, so they are actually doing pretty well. But within PSU, say something like BHEL, which is again into cap goods, again not looking good, because here there was a monthly close and now we are having a follow up selling. So not looking good. So capital goods is very mixed. And in general, okay, in general, I feel that this will start becoming much more narrow market. Okay, which means that kind of the earnings will end up dictating how the stock moves. For example, HCL Tech has done well, Infosys has done well, TCS is still down 30-35% from its top, which is not a good sign, right? So what I'm trying to say is that within sectors also you might start seeing divergence. Like we saw that Cummins India was rising higher, ABB is falling, right? Thermax is falling, and so on. So you will need to be very very stock specific now. I mean, having a broader sector level view will kind of help you to avoid the pitfalls. But if you have a very very strong view on something, then that may kind of help you. Okay. I hope, Deepak, you understood what I'm trying to say. Are you tracking railway pack? It has been showing some signs of accumulation pre-budget. So there is a story always that railway stocks rise higher before budget and then they falter. And anyways, I honestly don't track railway stocks, mainly because there is no index, and we look more from a top-down perspective, which means that if index is looking good, you go down lower and try to find stocks. That is just our way of trying to analyze things. So yeah, do you see reverse head and shoulders pattern on hourly chart? Yeah, so I mean, when it is around the resistance level, you might think so. I think you might be talking about maybe this inverse HNS pattern. Uh, I mean, the right shoulder is not that. Oh, sorry, I have taken BHL chart. Sorry. So no, I don't know how will you call it an inverse HNS. I mean, if you are trying to call this as an inverse HNS pattern where this is left shoulder, this, I mean, this is very awkward. I would rather actually think of this as a channel and not some inverse HNS and try to force something on it. Siddesh, should long only traders wait for 25,800 to cross by the Nifty index? I think said yes. In fact, see, to be very honest, now I would not just say 25,800, but I would say 26,300. That is because we have resisted thrice over here. Okay, over here also, see, I'll tell you very honestly, I mean, these are all things now in public. So and also I have made mistakes over here. So which means that first I thought that if this will break, then you will have this trend line broken on the upside and then it again corrected, right? Then it again rose higher and I thought it will again rise higher and then it fell. So actually, given that I have some very bad memories around here, so of course, because we have been tracking day on day, so if there was any reversal, I was being very vocal about it that there is reversal that is forming and you need to be careful. But ideally I would wait for 26,300. Now you may argue that, oh, if we wait for 2600, then a big move will be lost. But my counter to that is that, and this I have spoken many many times, but I mean, I'll just make you understand how I think about it and why. we should not be penny wise pound foolish. Okay, wait, let this chart load. I'm not sure why is it taking so much time. Are you all able to hear me properly? Because I'm not sure if there is a net issue. Okay, this seems to be working. I don't know why there are few times when I see this happening. Let me just try to check it on Google. Yes, I don't know why this happens sometime. We need to find a solution for this. Actually, there were some changes that we were supposed to make, which I had asked developers. I'm not sure if that is because of this. But anyways, Sid, I, just to let you know, the thing is that I have mentioned this in the past. Maybe I'll do it again once this chart loads. I just need to be a little patient right now with this chart. Yeah, I think we will get it now. Yeah. So the broader point is that whenever the FIS positions have been to the extreme level, we have typically seen 10 to 15% kind of rally from the bottom. Okay. And if I apply that same logic from around 25,000 or so, huh. So see, now we have it over here. Now you see this. Firstly, there has been a range change. For some reason, I don't know. But typically what I mean is that when we end up seeing those short covering rallies and you measure it from a price perspective, this is 18%. Okay, then again there was this short covering from here that we had seen, and it had again lead to those 16-17% kind of move. Again we saw those extremes over here. We saw 14-15% kind of correction even after Trump had come. All those tariff thing had happened. Okay, we broadly saw till here. Okay, this 11-12, I mean this, if I have to extend it, this again turns out to be 16-18% kind of move. So what I'm trying to say is that every time in that short covering you will end up having those 15-16% kind of moves. And if I have to do that, the projection comes to around 29,000, right? So I wouldn't want to be pennywise pound foolish by trying to time here and do and try to act cute. Because one thing that I'm kind of sure is that once we get a decisive break, I don't know what that decisive break will be. I mean, ideally I would mean that at least it sustains about 26,300 for 2-3 days, which hasn't been the case so far. Then the targets of direct 29,000 will open up. When it happens, how it happens, I don't know. What will trigger it, I don't know. But it is what the past is telling us, and that is what I'm relying more on. Okay. So that's why I would say not just 25,800, but 26,300 is where the final confirmation is. 25,800 breaking above that will be an indication that there is a good chance now for the prices to rise higher towards all-time high. And then breaking above all-time high is where I think the confidence will really come in. So I hope that answers your question. Deepak says, yes, thank you so much. We'll hold my horses on this. Yes, it's much needed, I would guess. So, see, I don't want to comment on stocks. I don't want to advise it. Uh, so please avoid it. I mean, so please, I'm avoiding it. So yes, Sid, see, we are also constantly trying to improve it, and what happens is that when we try to push some changes, that's when you end up seeing this thing. And developers, they are already working on it every day almost to do some changes and so on. So that's where sometimes it would be lagging, but I think everyone would acknowledge that the strike that we are seeing now is much much better than what we were seeing 6 months back, because there were frequent breakdowns and all. That at least is not happening. Sometimes this 1 or 2 minute timeout happens. This we need to get it fixed. The problem is that these issues are not reoccurring every time, and it happens only a specific time out of blue, and that's where debugging is a little difficult. uh, but yeah, I mean, our constant effort is to make it smooth, and better for you all. um, Again, it says for some reason FIs have not bought into market since July 2024. That's not encouraging. Yeah, I know that. So that's also because, if you see from that time onwards, the other Asian markets have done pretty well, and FIs don't have the obligation to, or the mandate to be only invested in US, in India. So that's why we are seeing that. But I think, I mean, these are all temporary things. When those market falter or those market don't do well, see, I would think of it this way: when the other markets are doing very well as compared to India, so India is getting relatively cheaper in that sense for them. And of course, we have our own troubles of currency falling and so on. So I wouldn't give those things much importance at this point of time. I would focus on trend. Right now the setup is good for a medium term big move as well, but those confirmations right now we are not getting. Okay, so somewhere around 24,500, if the Nifty falls, I think the risk reward will start getting very favorable for medium to long term. Right now we are somewhere hanging in the middle, nor here nor there. So it is either break about 26,300 or a fall to 25 300 500 24 300 500 sort of levels. That's where things can get interesting. Till then, in cricket analogy, you can say that till then it's time for defense, and it's time not to get out. Okay, I mean, we just have to stay course, and wait for the loose ball for to come to us for to hit us six. So that is how I am looking at it, in the current context. So yeah, I think it was a good discussion today. It's already 5:38 now. Thank you everyone for all the questions. I think we have broadly covered everything. Let's catch up tomorrow. Tomorrow will be a monthly close, so we'll see what happens. I mean, all the places where there are positive buy, I mean, bullish crossover, bearish crossovers happening, and maybe we'll try to make a sense of it as to what is happening. Okay. So until then, goodbye and see you all tomorrow at 5 p.m. Thank you.